Solana is one of the most hyped projects, but is there any real substance behind it? Or is it all just hot air? Is now the perfect entry point? Hello and welcome to Finance with Axel. I took a deep dive into another layer 1 blockchain, namely Solana, the last couple of days. And these are my findings. Before we start, remember, I'm just producing highly quality educational and entertainment content. None of this should be deemed financial advice. Solana is a highly scalable, fast blockchain that brought some new innovations to the space. I am referring in particular to their hybrid consensus model with improved scalability, introducing a proof of history POH consensus combined with the underlying proof of stake or POS consensus. In other blockchains, the validators have to agree on a time before a block can be added. On Solana, timestamps are added to all transactions, making it more easy to agree what happened then. Basically, validators can process many blocks at a time, and the correct order does not have to be agreed upon yet. The correct ordering will be done later based on the timestamps. Many blocks get produced at a time and not one after another, allowing Solana to be the fastest blockchain on the market, which still has decent decentralization. Up to 50,000 TPS are currently possible on Solana, and according to their documentations, up to 710,000 TPS will be possible in the future. This is because Solana is not bottlenecked by its software, but by hardware only. Once hardware evolves and becomes available, the speed will also increase. Therefore, Solana is a high-performance blockchain and will not need any layer 2s in the foreseeable future. Solana is undoubtedly fast, but its degree of decentralization is still very much up for debate. The cost to run a Solana node is much higher than on other protocols. It's simple to claim a network is decentralized, but in practice, maintaining decentralization is much harder than it sounds. Solana claims to have solved the blockchain trilemma, though people still argue that the platform isn't as decentralized as it claims to be. To become a validator, an individual needs to spend thousands of dollars on hardware, as distinct from other blockchains where anyone can become a validator for much less. Solana has to have such high requirements because it wants to be super fast. This leads to way more centralization, as not many people have the capital to run a node. This matter could become even worse than the hardware requirements might be increased in the future. You could also argue in favor of Solana that it is actually way cheaper to run a validator, as there is no minimum stake needed, which often costs 100,000 or even more on other chains. Although no minimum stake is needed, validators will still need a lot of Sol, as every validator has to vote every day, which costs about 1 Solana per day. You could also argue that attacking the network is easier on Solana, as a malicious actor does not need to put up a huge stake. Slashing is also not automatic, but it can be done still. Solana aims to slash 100% of malicious actors, but don't want to punish people who made mistakes during daily routine without malicious intent. Slashing, to me, seems pointless anyways, as validators don't have to put up a stake in the first place. Currently, Solana has about 1800 validators, but the super minority is at just 19, meaning that 33% of the stake is on the top 19 validator nodes. If they all shut down, the chain would stop. This is of course extremely unlikely, given they are independent and there's no incentive for them to do so. But This is an important reason why you should stake nodes below the so-called halt line. After all, Solana is still very central. A way bigger security issue is that the network has been plagued by repeated outages that have impaired its price and aspirations to be the Visa of crypto. If they don't get a grip on this, Solana will fail. Keep in mind, technically, Solana is still in beta and hurdles and bugs are expected in this phase of development. The native token of the Solana blockchain is SOL. It has three main functions. First, it's used to pay for transactions and therefore pays for fees. Second, it can be staked to secure the network. Users doing so will earn a yield. Third, to govern the protocol. Solana is also smart contract compatible, but there is a catch. It uses Rust programming language, which is also often used outside of blockchain, which gives Solana potentially a much larger pool of developers. This obviously is not the catch, but it is not DVM compatible, meaning that apps from Ethereum written in Solidity cannot easily port it over. Developers would need to code it again and potentially learn a new programming language instead of just copy pasting, which would be possible with EVM compatibility. However, there is also good news in terms of EVM compatibility. Neon Labs is working on making Solana EVM compatible. Once implemented, this will most likely boost adoption of the Solana blockchain a lot. Speaking of adoption, unlike most other blockchains, Solana has not lost volume in the bear market. On the contrary, daily active users and transactions seem to be on the upward trend still. Solana is also increasingly used for NFTs, which is also due to the fact that transactions on Solana are much cheaper than on Ethereum. The ecosystem is also thriving with a lot of dApps on the platform. Solana is used for NFTs, games, and DeFi too. Solana has backing from many well-known VCs. First and foremost, Sam Bankman-Fried, the multi-billionaire owner of FTX. This means that investment professionals are invested and also actively participate in the future development of Solana and its ecosystem. Long-term, strong support by venture capitalists and FTX means that the token should also appreciate in value. The team behind Solana also seems to be solid, but I would have hoped for more transparency. As there is no information on their official website, many of the employees were recruited from Qualcomm, which is a multi-billion-dollar corporation that manufactures semiconductors and provides products for mobile communication based in San Francisco, California. Other transparency issues include the roadmap has been removed from the website, which could indicate missed milestones. In addition, it is completely unclear how the Solana Foundation spends its funds, and there is no transparent accountability. Also, the white paper is no longer available on Solana's homepage. Furthermore, Solana is accused of favoring venture capital investors and insiders with unfair tokenomics. I have to say that this, unfortunately, is true. The team, advisors, VCs, and the foundation secured a huge share of the supply in the ICO. Very unfair and high discounts were given in the private presale. Sol were sold at 4 cents, while later investors in the ICO paid up to 25 cents. Insiders and the foundation also secured more than 60% of the token supply. My last big con about Solana is that it is way less secure than they want you to think. That's why institutions might back out or not adopting it in the first place. The previous mentioned outages and the lack of decentralization are what we need to name here. But there are even more red flags DeFi Safety, a security firm, found for DeFi on Solana and Solana in general. First, it's unclear where the foundation stores the chain's history. Second, updates are handled in a haphazard manner and there is no process for an archive node. Third, the block explorer is subpar compared with Etherscan. Finding old transactions frequently is not possible and leads to 404 errors. If a blockchain is not verifiable, what's the point of it in the first place? Fourth, audits have been missed or are out of date. Fifth, there seems to be a lack of formal process regarding upgrading the system. Solana needs to, quote, pursue formal verification on the chain to ensure it functions as intended, like other leading layer 1s do. Sixth, seems like Solana has no security researcher to make sure they are bug and exploit free. Instead, they only have a bug bounty program. Seventh, quoting again, any serious DeFi risk analysis will identify that the risk-adjusted return for any activity on this chain makes the opportunities irrelevant. Also quoting a few of their conclusions. All in all, Solana presents systematic technical risk. There is no doubt about it. Solana justifies this as still being in beta. The fact that Solana has to state to users that funds are safe is probably an indicator that they are not. Their users deserve better. DeFi deserves better. We are hopeful that this will be the case soon, but Solana has been around for so long now and downtimes are as frequent as ever. Audits are irrelevant and out of date. Node implementations are anemic. Development is arbitrary. The core contributors are unresponsive to requests for comments. We cannot see a documented process for verifying chain archives. Move fast, by all means, but show your users and their funds the due process blockchain security requires. At the moment, Solana does not. Anyone who uses this chain subjects themselves to massive and at this point seemingly inherent technical risk and trust. We cannot advise any serious investor to use this chain. So in essence, Solana definitely has a long way to go and noting where improvements are needed is important. I also cannot verify all the claims as I don't have the deep technical understanding of these guys. But so far, I also didn't see a statement from Solana denying or correcting any of the claims made. You got all the arguments now. You should be able to make your own decision. Make sure to first verify yourself if the set is true and don't trust a random dude on the internet. Always also do your own research. I personally still think that Solana is an interesting and promising project that could still do well if it can fix its shortcomings, especially the frequent downtimes and security issues. It's blazingly fast compared to other chains, and if the proof of history consensus mechanism can stand the test of time, this definitely will appreciate in value, but a lot of work has to be done until then in order to fix the shortcomings. Keep in mind that I might be biased as I invested recently after another huge dip. There are definitely a lot of risks involved, but the price might already reflect all the shortcomings as it dropped almost 86% from its all-time highs. It's definitely a high-risk investment, but it will also be high reward and extremely profitable if they can address and fix the current issues. Let me know what you think. Thanks for watching. Please like and subscribe if you want to support my work and the channel. Bye until next time.